All right, welcome back for the episode of Carnivore Trades. Today is Monday, March 13th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, gap down today, as we kind of thought that would happen on Friday, right? So generally when you have a pretty good sell into a Thursday, Friday like that, generally you're going to want to test lower prices on Monday morning. And we are getting a little bit of a rally. Now, this isn't the greatest rally here. Definitely on the weaker side here is the Russell 2000. We would want to see that. If this is going to be a major bottom here, you want to see the Russell kind of lead. Semi is also a little bit on the weaker side, and the transports are still red. Never actually went green on the day, so a little bit of weakness here in breadth. And I obviously carry over from the banking, regional bank problems. Lots more of them. Take a look at Regions Financial. Look at this move here. Gap down to 14, rallied all the way back almost green here, and now down 7%. So a lot of these troubled firms here, there's Schwab there, all the way down to 45 and back up to 52 there. So obviously that's the focal point right now. And there's a lot going on in this market here. But again, lots of weakness. And if this is going to be a pivot low here, generally you'd want to see a V shape and really no selling until about 2 o'clock. And then you see a little pullback and then possibly, slight higher low and then close near the highs of the day. We're not really seeing that. I don't get the sense that shorts are really scared right now. Like, they definitely seem to be, for the most part, in control here, and the market does seem a little subdued. So tomorrow, CPI. This is very interesting here. So there's a lot of dynamics going on right now in this market. Let's take a look at the 2-year. Up 106 basis points right now. Humongous move on the 2-year. The 30-year, actually, believe it or not, TLT actually just went red here. But there's the the 10-year, the 10-year yield down 4.87 right now, and we'll flip back to the bond. Stop making it confusing here. But up 119 basis points here. But basically, the big story here. Let's flip over to the yield curves. And there's the European markets, which I'm not going to forget to do today. So here we go. So here's the yield curve, 210, 49 basis points inverted. Still very inverted, but it was 108 trading days ago. 3-month 10-year is actually red on the day, so it's still not really any progress there. 5s and 30s back to parity. 10s and 30s are above parity. This is generally what happens right before the recession starts, specifically in the 210. This should be moving as well, but we're seeing that 2-year bid. We're seeing kind of a traditional risk off, right? Like the 30-year is bidding, although TLT did come negative on the day here, but the ZB is still up 1.5% there on the day. Why am I bringing all this up? Well, because tomorrow, if we get a really cold print, like anything other than Goldilocks, well, okay, I'll put it this way. If we get a hot print, the market's probably going to panic and the VIX will explode. If we get a cold print, I would expect we probably pump up in the morning, off the initial reaction, and then I think we probably fade that. I don't know if we fade it that day, an hour, a week, but generally, when the Fed pivots, or I should say when that, when you get that final recession, like recession is here print, and the yield curves start to normalize, that's where, the recession starts. And that's usually where the market, tops out. We might ask, why is that? If the Fed's going to pivot, well, then why would the market, fail? Well, it's because the recession is here, and the market doesn't bottom before the recession starts. At least it never has in history. One. Number two, even if that comes in really cold, it's still going to be really hot historically. And you've got a government trying to bail out these regional banks while you have, 5, 6, 7, whatever percent inflation. This is, you're starting to see the quandary here, the box, right? So this is why it's problematic. Now, again, like I said, if we get a hot print, just forget it. We're going to probably gap down and we're going to flush pretty hard. I'm kind of favoring that doesn't happen here. But this is kind of what the crossroads we're at right now. Is the ZB right now, the 30-year, is that bidding up because the market expects it to come in cold, or is it just a pure risk off play? That would be the first time it's acted as a risk-off play in a long time, but you could make a case that it is because take a look at the VIX is acting like risk-off for the first time in a long time, right? We've had sell-offs during this, period here the last couple of months, but the VIX hasn't done, anything really up until the last couple of days. So we're seeing kind of a more traditional type of risk-off here, at least for now. But that CPI number is going to be everything. And again, if it comes in hot, just forget about it. Because it's not so much about what they've bailed out already. They've already kind of, put some backstops in place. They put lipstick on the pig. It's about if the Fed has to continue hiking rates, what else is going to break? My personal, my thought, everybody's expecting 0. I think they're still going to do 25. That's just my guess here. But for right now, we'll see. Again, we'll have to see what happens if we really, dump out. Maybe they get a little bit more dovish. Who knows? But either way, that's kind of what I'm looking at going into tomorrow here. Best case scenario for the market for the bulls here is you get a total Goldilocks print, like exactly in line with expectations, and then you can probably rally. So that's really kind of what you're looking for. Again, but you're going to have resistance here at the 200, the 100. Moving averages there on the daily, as well as this head and shoulder neckline. So if we rally up and that gets rejected, that's not good news either. So really, market's in a box here. We're starting to fade a little bit here in the last half hour. I wouldn't make too much out of it here. Again, it's all about that CPI print. We have PPI Wednesday. I don't think that's going to be as important. Then there's some jobs data Thursday, and of course FOMC next week. So that's what we have on tap right now. Very interesting stuff going on here. Let's take a look over at the Qs. So triple Qs up 1%. They're still showing leadership right now. And again, a lot of the reasoning here, I think, is a lot of the downside's been pulled forward last year. And so you're seeing kind of that upside here in the Qs. The Qs are showing leadership. Tesla up decently on the day. This actually, we covered a short in Tesla this morning, pre-market. So that was a nice little gain for us, over 10% on that. And it's holding that 50 moving average. But you're seeing kind of the leaders, the big names. Apple up 1.5. Sort of a flight to safety here. Microsoft up 2.6. Let's take a look at Google there. Google up, 75 basis points. Amazon up 2%. So some even Meta's up. Yeah, Meta up 1% as well. So kind of the big names doing the heavy lifting. The semis are definitely on the softer side, only up 25 basis points, but still holding that flat line here. They were definitely a lot weaker earlier there, as was the Russell, like we mentioned earlier. This is just, basically in free fall. We're getting a dead cat bounce here. There should be a lot of support in this area. And I would favor a dead cat bounce here, at least for the next couple of days. It's very oversold, but you're seeing the weakness here in the markets. There's the Dow. Again, the diamond back testing that all-time high trend line. So that's getting a little bit of a bid here. So, maybe we can bid up here. But again, you're going to have resistance on the diamond at 326 there, as well as shorter term in that 200 MA. All right, over to cloud here. So IGV up 1%, again, holding that 100 MA. Remember, this did have a failed pattern, though, on the weekly. So just be careful of that. I do think either way, I think we have lower highs, are going to be set across the board on whenever the next rally comes, just so everyone's aware. But IGV up today, transport's down 1.5, and they are off the lows. They hit the 200 moving average there. It's getting a little bit of a bid, a little oversold, but again, still weak here, whereas everything else is green or flat. For the most part, transport's on the weaker side. So definitely noteworthy there. All right, we already talked about rates here. Let's go over to housing, XHB. Again, looks like everything else here. Big cut on Friday. Little kind of dead cat bounce today. Again, it's going to be all about CPI. Again, this is your resistance now, as well as the 50 MA there. On the daily time frame, same thing with the ITB, that 20 MA, right around 68.25 also is a little bit of a pivot there to watch for. And then VNQ finally getting a bid. This is green, up 1.5%. Good volume there. So nice bid off the lows. This will have resistance right here. At this trend line around 84, just above 84. Then you'll have a little bit more at 85.75. So in that area, and then of course that trend line there that is upsloping, which we broke down from last week. All right, let's get over to fins. Okay, everybody knows they're getting beat down here still. XLF overshooting my target, but when you have panic, that tends to happen. We are going into a lot of support, though. Lots of support here in this green bar. And you do have a doji candle on heavy volume, so maybe this can get a bid. Again, there's bailouts, but, there's lots of things going on right now. Yes, there's bailouts, but there's forced liquidations, rebalancing. You see the KRE, obviously, big doji. This is into a massive level of support as well. I don't know if I would... I thought about picking up a small position in this, but I mean, the upside I see is maybe to $50, so I just don't really see it being worth it. The whole ETF's not going to crash though, so I mean, there's that kind of upside. I mean, it already kind of has. So either way, it's into support here, but obviously Finn's just getting smoked. Nothing really too new to add to it. Broker dealers down 3.28%. What was this, 2 weeks ago? It was at 513, and we're at 437. That's not a tech stock, guys. That's Charles Schwab. That's TD Ameritrade. These are big Morgan Stanley. These types of names. Then that's a huge haircut there, going into a ton of support there with that green bar. But just massive cut there. Beautiful, massive rising wedge there on the daily and weekly. Anyways, over to energy here. So crude kind of hanging on by a thread. If it loses this pivot, it's all over. So again, CPI tomorrow, that comes in cold. I expect crude to take a dump. So we'll be watching that. Again, nothing really else to add to it. Again, it's got a nice bare base. It's set up. It's ready to go. Just needs to push through it, and we'll see if it can tomorrow. If not, then again, you guys know the upside. We got to break that area, and then we can go higher if that happens. XLE little breakdown, so maybe foreshadowing something in crude, potentially. I think it's got to go back to this trend line. I've been saying that for months here, and it's held up, and really, it's starting to put in lower highs now here. You see the high, lower high, lower high, lower high. It's still outperforming the market, but if, eventually, what goes up must come down to a degree, and you are having that inside bar play out there on the weekly, at least for now. Again, there's still 4 days left, so who knows what's going to happen here, but XLE definitely on the weaker side today. XOP as well. We noted that, the last couple of weeks, the lower highs in that also, and, it's getting into support here, but I think it still has a little bit lower to go on the daily chart than OIH. What a collapse. So that is, we talked about that last week as well. Big outside candle, failed bull pattern. So this should go lower. I said 280. We're into that level right now, getting a little bit of a bounce. I think this wants to go lower. So you get the 200 right there, and then this previous trend line. You get through that. What have I been saying for months, guys? It's going back to 250. So it's got to go there eventually. Whether or not it went up to 350 or not first, you got to back test this area, in my opinion. So either way, nice dump there on OIH. We'll see what it does tomorrow, down 4.5. Natty, nice move here. So up 8% on the day. That is ripping right now as we speak here. It didn't quite get to my level here. I was looking for, and I think everybody else was looking for it too. But you see obviously that gap fill and the 618 there right around 237. Sometimes when a level's that easy, they'll get real close, and then somebody front runs it. So maybe that just happened. If not, it could still get down there. Definitely can't rule it out. But that is a nice move here back above the 20 MA. So we may have that secondary higher low in place on Natty. And if it does, this 50 moving average is minor now. As we've come in, we got close, and we put in a higher low. So I don't expect it to hold as resistance for very long if it gets up there. All right, dollar index backing off again. So, it's interesting. This is why I say we're kind of at a juncture here. We are into the 50 MA. You're into this support level here. This is where you broke out of. You're back testing it now. This is the only kind of thing that's not behaving as a traditional risk off, right? We got the VIX up. We got bonds up. The dollar isn't. Is it just that the algos are still programmed to sell the dollar when the 30-year rallies? I don't know. That's what it seems like right now. This is still into support, though. And on the weekly, nothing's broken with it. Up move here, went into the necktie of these moving averages, and you're pulling back. We'll see what it does tomorrow. Again, CPI is going to be everything. Gold, obviously, acting as a risk-off trade. Huge move here. There is a level. I do have a level on gold. At this point, you'll have a little bit of resistance here at this trend line with this red bar. But 1962, that's the level I've got for that. If you guys can figure out how I came to that level, you get a gold star. Let me know in the comments. But that's where I think it wants to go. And we'll see how it behaves when it gets there. It's going to be very important to see how this trades over the next couple of weeks. Silver also getting a big outside move up over 6%. This should stall out here. Maybe it can get up to 2250. That's about all I see at the moment. But nice move there for the PMs. I don't think this is the low yet, just so you guys know. But maybe if we get a bull pattern, we could jump on board here. But I still have this making one more drop, believe it or not. And then platinum, it finally got up to 1,000. So I said that a couple of weeks ago. Look, it might get up to 1,000. Then we got hit really hard, and put in a higher low. So there it goes. So platinum holding up. This will have resistance at 1030. We'll see if it can get there. I'm not sure what it wants to do right now. Anyways, over to copper here. Market's about to close here in 2-1, and there's the bell. So copper, possible little fake breakdown here. So I think this does need to do some more consolidation. We'll see. Again, the CPI come in really cold. It could drop it, but it got back inside of this wedge, so probably not ready to break down just yet. I still think this has to go down to 375 any way you look at it. All right, over to Bitcoin here. So Bitcoin's important. Huge squeeze here today, or is it a squeeze? I thought it was a squeeze earlier, but I think what you're seeing is, and forgive me for last night, I don't know if you guys caught the video on Wall Street from Main Street. The Bitcoin closes Sunday night, so that was not a failed inside bar, so I correct that. You can see here, they saved it at the last minute. When I made the video, we were like down here, and I forgot that it didn't close until Sunday night, so it still had a few hours. And notice how they saved it. They jammed it up there in the last, 2 hours, literally, to save that green bar. So Bitcoin holding up here. What's the reasoning? It could be as simple as people are moving money out of their bank and they don't know where to put it. So this actually provides a pretty good alternative if you're just looking to park it. Now, understand, this is still a volatile asset. It's not something that people are looking to put their money in long term, at least not, the majority of market participants. But if you need to park it until the dust clears and kind of the water gets warm again, until this banking thing kind of blows over, if it does, that's, I could see people moving, at least diversifying, pulling money here, putting into a brokerage account, putting into a crypto account until this thing, blows over. So that does make some sense to me here, but huge power move. And again, the fact that they saved that weekly candle was probably telling you that it was going to happen here. Also, if you take a look on the hourly, when did it really start bidding? It didn't really happen until, we got a nice bid here. Obviously, they jammed it up, but it got a secondary surge here in the morning as soon as the stock market opened, right? If you were stuck in your bank overnight, you couldn't trade until the market opened this morning. So that's, it makes sense to get that surge there. So that could have, be something behind it. I don't know if it is, but just kind of taking a little educated guess there. Anyways, it can get up to 26,000, maybe even test this upper trend line again. So Bitcoin is holding up bottom line and maybe even all the way up to here. So we'll watch that. So it is in much better shape here, but yeah, nice move there for Bitcoin. Anyways, over the European markets here, nice breakdown. So I said last week I didn't like the upside here, not much in it. And obviously we rolled over with the rest of the market as if the S&P does. This will here as well. So Euro 50, that probably wants to go and touch 4,000 again. So you have your pivot highs right here. This is your breakout. That's where it should get back tested. The DAX right around this 14.5 area, 14.6. That's your good support level there on the daily time frame. So we'll watch that, but nice little breakdown there. Take a look at the Sensex rolling over back below that 200. That can trade down into 57,000 here in the near term. And then the UK, this one took a pretty good dump here. So 1, 2, 3 down all the way to 7,500. That probably wants to get down to 74 and then possibly after that 72. But in the near term, I think your max downside is that 200 moving average. And there's also a 50% fib from the low here. So that is a level that we can keep an eye on as well. And you're into the 382 now, so it may get a little bit of a bounce. It may have to do some flagging to get through that, but ultimately I do think it wants to go pierce that 200 moving average. Anyways, all right, let's get back over here. So again, all about that CPI number tomorrow. If we get a super cold print, remember, market wants Goldilocks. It doesn't want super hot and it doesn't want super cold. If it comes in super cold, we'll probably get a knee-jerk reaction up, and then I think that will get faded. So that's something to look for. And obviously a hot number is just no bueno any way you look at it. Anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.